Gas prices aren't just going up, they're quietly raising your insurance and grocery bills too. And most people don't even realize how it's all connected. When people hear about the war in places like Iran, it feels far away, different country, different problem. But here's the truth, it hits your wallet faster than you think. Because when fuel prices go up, everything that moves gets more expensive. And that includes your car insurance, your food, and even basic daily costs. In this video, I'm going to break down exactly how a war overseas ends up raising your insurance rates and your grocery bills, and why this isn't just temporary. The chain reaction starts with oil. Let's start at the root cause of all of this, oil. Iran sits on one of the most important oil regions in the world. When there's conflict, supply becomes uncertain. And when supply becomes uncertain, prices go up. Even the fear of disruption is enough to spike prices. And here's the thing that most people miss. It's not just about the gas prices at the pump, it's about everything that depends on fuel, which is almost everything. Gas prices are just the first domino. When gas prices rise, people notice it immediately. You feel it every time you fill your tank, but that's just the first layer. Behind the scenes, there's a much bigger system. Cargo ships transporting goods across the oceans, semi-trucks delivering products across the country, planes moving parts and supplies, factories running machinery. All of these rely on fuel. When fuel costs go up, businesses don't just absorb the costs, they pass it on. And that's where things start getting expensive fast. Why your insurance is about to go up. This is where it gets interesting. Most people don't connect war and insurance, but they're directly linked. Let's break it down. When your car gets into an accident, insurance companies have to repair it. This means car parts, labor, shipping those parts. Now think about where those parts come from. Many of those parts are imported from overseas, shipped across long distances, dependent on global supply chains. All of that runs on fuel. So when fuel costs go up, shipping costs increase. Parts become more expensive. Repairs go up. And when repairs go up, insurance companies have to pay more per claim. And when they pay more per claim, your premiums go up. It's that simple. The hidden costs most people don't see. Let's say 2 years ago, fixing a car cost $3,000. Now, because of higher fuel costs, supply chain issues, and inflation, the same repair might cost $4,500 or more. Insurance companies are not just going to eat that loss, they adjust. And those adjustments show up as higher monthly premiums, higher deductibles, reduced coverage options. So even if you haven't had an accident, you're still paying for the system that's getting more expensive. Groceries, the same problem, different industry. Now let's talk about food. Groceries don't magically appear on shelves. They move through a long chain. Farms, processing plants, distribution centers, trucks to stores. Every step uses fuel, especially diesel. And diesel prices hit trucking the hardest. So when diesel goes up, shipping food becomes more expensive. Stores pay more to stock the same shelves. Prices go up for you. That's why you might notice milk costing more, meat prices rising, produce getting more expensive. It's not just inflation, it's transportation costs being passed down to you. The problem, everything is connected. Here's where it becomes a real issue. It's not just gas, it's not just insurance, it's not just groceries, it's all of them at the same time, and they all feed off into each other. Higher fuel, higher shipping, higher repair costs, higher insurance, higher food prices. It's a loop. And once it starts, it's hard to stop quickly. Why this isn't temporary? A lot of people think, okay, gas went up, it'll come back down. Maybe. But even if it does, prices don't always go back to where they were before. Here's why. When businesses adjust their pricing upward, they rarely reverse it fully. Insurance companies especially work on long cycles. They analyze data, adjust rates slowly, lock in pricing for months or years. Even if fuel costs go down next month, your insurance rate might not, because they're pricing based on a long-term trend, not short-term cycles. The climax, you're paying for things you don't cause. This is the part that hits the hardest. You didn't start a war, change oil supplies, raise fuel prices, but you're still paying for it. Every time you fill your tank, pay your insurance bill, buy groceries, you're feeling the ripple effect of something happening thousands of miles away. And that's how global systems work. Everything is connected, and when one major piece gets disrupted, the cost spreads everywhere. Now, what can you actually do about it? Now, here's the real question. What can you control? But you can't control how prepared you are. For your insurance specifically, you can review your coverage, make sure you're not underinsured, shop smart, not just cheap, Understand what you're actually paying for, because when costs rise, being underinsured becomes even more dangerous. One accident in a high-cost environment can hit way harder than it did before. Conclusion: the war in Iran isn't just a headline, it's a chain reaction. Fuel prices rise, shipping costs increase, repairs get expensive, insurance premiums go up, groceries cost more, and it all happens quietly, in the background, until you feel it in your wallet. The key is understanding the system, because once you see how it connects, you can make smarter decisions instead of getting caught off guard. I hope you found this video helpful. If you did, please make sure to like, share, and subscribe. Follow us on social media, on Instagram and on Facebook. If you have any further questions about your insurance, feel free to send us a message anytime. We'll see you in the next video.